This is the worst fall of the dollar in decades. China has just offloaded billions of dollars in US debt. On Wall Street, they are already calling it the Sell America moment. Something serious is shifting, and very quickly. Countries that once upheld the US financial system are now quietly stepping away. At the same time, American investors are losing confidence and moving their money overseas. Why? Because the pillars supporting the dollar are beginning to collapse. In this video, we'll uncover China's hidden moves, reveal the trends Wall Street prefers to avoid, and explain why all this could mark the beginning of a global restructuring. So, don't go anywhere. Let's start with a fact that should concern every American. In recent months, the US dollar lost a staggering portion of its value compared to other major currencies. That means if you had a certain amount in your bank account at the start of the year, its purchasing power on the global market would have shrunk significantly just months later. That's a substantial loss, and most people didn't even notice. It may sound like just another statistic, but in reality, this is the worst start to a year for the dollar in decades. The last time anything similar happened was decades ago, when the US abandoned the gold standard and the Bretton Woods system collapsed. Headlines flashed by, but the true meaning slipped past the general public. This wasn't a one-time panic or a single crisis. It's the result of a dangerous mix: aggressive and unpredictable trade policies, uncontrolled government spending, and a sharp decline in trust that the US can manage its economy responsibly. And no country has expressed that lack of trust more clearly or more forcefully than China. While the Trump administration has been vocal with tariffs and trade war rhetoric, China has made its moves more quietly and far more dangerously. In one recent month alone, Beijing secretly sold off billions of dollars in US Treasury bonds. The news, which only came out recently, sent a quiet shockwave through financial circles. This wasn't just an economic move, it was a clear message. China is signaling it no longer wants to be a primary financier of the US financial system. This action is partly a reaction to Trump's policies, but it's also a key part of a much broader, long-term strategy. For years, China has been methodically working to reduce its dependence on the dollar, and the significant sell-off recently shows they are accelerating that plan. What's especially alarming is the long-term trend. For years, China has been gradually but consistently reducing its holdings of US debt. Not long ago, China held well over $1 trillion in US government bonds. Today, that number has plummeted dramatically. That's a staggering drop over the past decade or so. In essence, China has already divested from hundreds of billions of dollars in US debt. And what happens if other countries follow its lead? The US government will find it harder and much more expensive to borrow the money it needs to function, threatening the entire system. With its remaining US assets, it's highly likely China will continue to sell, reallocating its vast resources to strengthen its domestic economy and diversify its reserves. But this isn't just about the fall of the dollar. This could be the beginning of a structural collapse in the US economy as we know it. To understand the gravity of the situation, you need to understand how the US government pays its bills. For decades, it has been spending far more than it collects in taxes. To cover this massive shortfall, the US constantly borrows money. It does this primarily by issuing treasury bonds, which are essentially IOUs. When countries like China, Japan, or the United Kingdom buy these bonds, they aren't just making an investment, they are directly financing the operations of the US government. That money pays for everything from military salaries and social security pensions to infrastructure projects and public programs. As of today, the US national debt has exploded past an almost incomprehensible sum, now measured in the tens of trillions of dollars. Every year, hundreds of billions of dollars must be borrowed just to keep the lights on and pay the interest on the existing debt. And this is where the existential threat emerges. The entire system is balanced on one fragile hope: that there will always be buyers for US debt. Yes, the dollar is still the world's main reserve currency. Over half of the world's central banks hold their reserves in dollars, and treasury bonds have long been considered one of the safest assets on the planet. But that dominance is no longer guaranteed. The cracks in the foundation are becoming too visible to ignore. If countries start offloading US bonds en masse due to fears of inflation, political instability, or simply a strategic desire to escape US economic pressure, the consequences will be catastrophic. America would be backed into a corner with only two terrible options: either hike interest rates dramatically to attract lenders, making its debt even more expensive and likely triggering a deep recession, or print more money, which would ignite runaway inflation. Either path leads to a good outcome. The Treasury bond market is the bedrock of the entire US financial system. If it cracks, borrowing halts. Without borrowing, the government simply cannot function. That means public services could stop, federal salaries could go unpaid, essential programs would be frozen, and even a default on US debt, something once considered unthinkable for the world's strongest economy, becomes a real and terrifying possibility. While the world was distracted by interest rate hikes, trade wars, and volatile markets, China was making another move. Quietly and without fanfare, it was shedding dollars and buying up gold in massive amounts. Over the past few years, the People's Bank of China has been on a gold-buying spree. In recent times, it has been consistently adding to its reserves every single month. This is one of the largest and most sustained gold acquisition campaigns by any central bank in the world. Recently, China's official gold reserves have grown to exceed thousands of tons. But here's the catch. Many experts believe the real number is significantly higher, with large quantities potentially hidden in state-owned banks or purchased through non-official channels. So why gold and why now? Because gold is reliable. It belongs to no single country. Its value cannot be erased by a presidential tweet or a Federal Reserve decision. It cannot be rendered worthless by a policy mistake in Washington. Gold is the oldest and most proven store of wealth in human history. It cannot be printed, frozen, or sanctioned. China learned a hard lesson from observing US foreign policy. The dollar can and has been used as a weapon. The US has cut countries off from the SWIFT international payment system, imposed crippling tariffs, and threatened economic sanctions. Beijing saw how dangerous it is to be overly reliant on a currency controlled by a geopolitical rival, and quietly began to shift its course toward the timeless security of gold. This crisis of confidence isn't just an international story, it's happening right here at home. Wealthy Americans are also signaling that they no longer believe in the direction their country is heading. Billionaires, top executives, and major investors are not just diversifying anymore, they are actively moving their money out of the United States in large volume. The year started with some optimism. Inflation had shown signs of slowing and markets were hoping for a soft landing. But by summer, everything had changed. Major US fund managers began shedding dollars, a phenomenon Wall Street has dubbed the "Sell America moment," a clear signal that internal confidence in the system is crumbling. The reasons are clear. Donald Trump's unpredictable policies, aggressive trade moves that have alienated allies, and persistent political conflict have created a climate of uncertainty. A recent Gallup poll paints a grim picture, with a majority of Americans believing their financial situation is getting worse. And the wealthy are not waiting around to see what happens. They are acting. They are shifting assets into European stocks, buying gold, and even acquiring second passports. According to recent data, the number of Americans seeking foreign investor visas and second citizenships has skyrocketed by an astronomical amount in recent years. BNP Paribas has confirmed that many of their clients, particularly large family offices in Asia, are openly selling off US equities. They're not calling it an escape, but a strategic rebalancing away from what they now perceive as American risk. The numbers are stark. According to Bank of America, billions of dollars were pulled from the US stock market in just 1 week. This isn't just a bad week for Wall Street, it's a clear sign that global confidence in the US economy is fading fast. Investors are rapidly shifting their capital abroad, and the biggest beneficiaries are Japan and Europe. In one recent period, Japan alone attracted billions of dollars in inflows. Europe drew in billions more during the same week. But it's not just about tariffs. Many large investment funds believe that US stocks have become dangerously overvalued, inflated for years by cheap money and government stimulus. Now that inflation is proving stubborn and interest rates remain high, that capital is seeking more stable and reasonably priced opportunities elsewhere. Japan, once considered an economy of stagnation, has unexpectedly become a safe haven. Recent reforms, price stability, and improvements in corporate governance have paid off, with foreign investors pouring money into Japanese stocks for weeks on end. Europe is also experiencing a surge. While its own politics and regulations are far from perfect, they appear far more stable and predictable than the volatility currently emanating from the US market. European governments are investing heavily in infrastructure, green energy, and defense, and investors are beginning to see these not as risks, but as major opportunities. What's fascinating is that while American investors are selling, some foreign players are still buying US stocks, perhaps hunting for bargains. However, that optimism does not extend to other US assets. US Treasury bonds saw their largest weekly outflow in years. What we are witnessing is no longer just a reshuffling within the US market, it's a real departure from it. In this year alone, vast sums have flowed into European funds and equities, significantly more than in the same period last year. Meanwhile, the United States saw massive outflows during the same time frame. The myth of American exceptionalism, the deeply held belief that the US economy will always lead the world, is losing its power. Today, the global financial world is prioritizing stability and clear long-term rules. And in this new environment, it is Europe and Japan that are coming out ahead. Even major US banks are adapting to this new reality. Bank of America is overhauling its entire trading infrastructure in Europe, preparing for a long-term reorientation of global capital away from the United States and toward more predictable regions. The key question now is this a short-term flight caused by temporary panic, or are we witnessing the beginning of a permanent global restructuring? Will the US government be able to shift course and regain the trust of the world and its own citizens? Or is the world already turning decisively in another direction? One thing is clear. The old assumptions about the United States as the world's primary and safest magnet for capital are cracking. For the first time in decades, investors are openly and aggressively searching for alternatives. And this is just the beginning. To stay ahead of this historic economic shift and understand what it means for your future, make sure to subscribe to our channel and turn on notifications. The next headline could be even more explosive.